Hi everyone, I'm Dr. Luluk. I'm from Economic Faculty of Sultan Agung Islamic University, Semarang, Indonesia. I'm going to present my article, Corporate Social Responsibility, Ownership Structure and Firm Value. I can see many of you are well informed, but I want to explore more. Globally acceptable corporate decision-making in ethical action that is not only concerned with corporate profit, but create a balance by using a triple bottom line that include profit, social function, and environmental stewardship. The development of activist and non-government organizations required companies to provide social responsibility to the community. In this case, the company must operate legally and contribute to improving the quality of life for employees, communities, and society in an active and dynamic organizational environment. It is an effort to increase positive reaction from stakeholders, especially positive reaction from investors. Therefore, it needs a means that can provide information related to a company's social, environmental, and financial aspect. In Indonesia, the Financial Service Authority issued a regulation regarding CSR equipment through Cap 431 PL 2012. It states that all companies registered on the EDX must disclose their corporate social responsibilities in company report. CSR disclosure can give information related to social and environmental aspects. CSR is a strategy to strengthen the company's going concern by formulating community development programs around the company through interaction with stakeholders to create a good reputation for the company. This is my hypothesis development, corporate social responsibility and firm value. Legitimacy theory and agency theory are the most common to justify the relationship of CSR reporting and corporate reputation, because the implementation of corporate social responsibility plays an essential role in increasing firm value. A key aspect of the corporate image is the stakeholders group's perception of how well the initiative and result of CSR implementation are in meeting stakeholder value and social expectation. The CSR strategy can be used as a mechanism to achieve better communication between internal and external parties of the company, because the CSR information disclosure within the company creates communication and social responsibility between the company and stakeholders and the environmental community around the organization. So, the first hypothesis, corporate social responsibility has a positive effect on firm value. The effect of ownership structure moderation on the relationship between CSR and firm value. Companies with a good ownership structure mechanism should carry out CSR disclosure as a form of company concern for their social environment. The bigger of company's ownership structure, the broader the company managers will be in disclosing social information from the activities carried out in the CSR program. As a result, it will have an impact on increasing firm value. The more significant the proportion of share ownership in the company, the welfare of shareholders who are none other than themselves will improve. Managers are also motivated to prosper shareholders and expand the information disclosure related to CSR affecting firm value. So, the second hypothesis, ownership structure has a positive effect on the relationship between corporate social responsibility and firm value. Research method. The population in this study comprised manufacturing companies listed on the Indonesian Stock Exchange. The study employing a purposive sampling technique, and it obtained 105 manufacturing companies. In analyzing the relationship between corporate social responsibility, ownership structure, and firm value, the researchers applied multiple linear regression analysis technique through the SPSS application program. This study used 3 research variables. The first variable, corporate social responsibility, use measurement social responsibility index. The second variable, ownership structure, use measurement the total number of outstanding share. And the last variable, firm value, was measured using Topin-Skew. This is a hypothesis test result. Next. The results show that the data are normal distribute. It does not experience multi-call and heteroscedasticity in each variable. In other words, the significant value is then 0.05. In conclusion, CSR moderate by ownership structure effect firm value. This is t-test in table 3. Based on table 3, the effect of CSR on firm value show t-value of 2.064 with a significance of less than 0.05. It explains that CSR positively affect firm value. Thus, the first hypothesis which states that CSR affect firm value is accepted. Our discussion. The result of the analysis indicate that CSR information has a positive and significant effect of firm value. It shows that a company that realizes the importance of disclosing corporate social responsibility is a company with good environmental and social performance. It will be responded to positively by investors through an increase in firm value, as reflected is an increase in its stock price. The cost incurred for the companies CSR will give medium and long-term benefit, thereby increasing the company's sustainability and reducing the capital cost. If, in this case, the company can maximize the implementation of CSR, there will be satisfaction and appreciation from stakeholders that can increase company reputation. The second hypothesis analyzes result in the effect of ownership structure as a moderating variable which weakens the relationship between CSR and firm value. In other words, the condition of the manager's manufacturing company has a low proportion of company share. The managers consider that not all profit can be enjoyed by company management. Accordingly, the interests of the management and the owner were not equal, and it could lead to conflict because the agency information owned by the management is not as comparable as information held by the owner. Besides, the lower share ownership by management, the lower the company's management performance will be. The management doesn't disclose extensively about social information in implementing CSR, so that it cannot increase firm value. It implies a lack of trust and interest from investors to invest in companies. Conclusion. The first hypothesis, which demonstrates the effect of corporate social responsibility on firm value, is accepted. The second hypothesis, which states the relationship between ownership structure as a moderating variable, weakens the relationship between corporate social responsibility and firm value, is rejected. The contribution of research is by showing the importance of company characteristics that play an essential role in the practice of CSR disclosure. Meanwhile, future research should develop this research by using the latest data and consider several other variables that can strengthen or mitigate the effect of CSR implementation on firm value, such as corporate governance. Okay, thank you everyone, and this is my last presentation. Thank you.